Hello there, and welcome to this week's edition of the Life and Legacy Show, sponsored by the Seckler Law Firm, where great families make great estate plans. My name is Tim Seckler. I am a certified elder law attorney, and I'm here to chat with you each and every week about the things that you probably need to know about in your retirement years about estate planning. You know, my goal is to help you to have a healthy, wealthy, and happy retirement. And unfortunately, the government has made this so darn complicated that you need an attorney like me to help you figure it all out. And so, it starts first with education, which is why we do this radio show. So I do the radio show every week. If you have not found it yet, we are in Cranberry Township. My law firm is called the Seckler Law Firm, secklerlawfirm.com, SECHLER lawfirm.com. And what we do is we help people figure this stuff out. I mean, my entire practice is devoted to estate planning, wills, and trusts. We do post-death administration work, and we do a type of case that we call a nursing home crisis case, which is what happens when somebody's in a nursing home without a plan. And this practice makes us pretty unique in that this is all we do. I'm not doing traffic tickets on Tuesday and divorces on Wednesday. We only help people plan for this. The firm has grown, so we are now at 5 attorneys working on this issue, and I'm here to share with you some things that I think that you'll probably find helpful, and hopefully my goal is somebody learns something on this radio show every week that helps them to protect their house, save some money, avoid a tax mistake, keep some family peace. Whatever your goals are, we're here to help you make them happen. Now, I'm going to get into some technical stuff today, so I need to do a disclaimer that this show is not legal advice. I am an attorney. I am not your attorney. We'd like the opportunity to earn your business, of course, but this is for your education and information. So don't make any decisions based on what you hear on this or any other radio show. It would be quite impossible for me to share with you all the pros and cons and all the different situations in your unique factual situation. So I wanted to show you. So we've been getting some questions here as of late. I have been quoted in the Post-Gazette a few times in the last month. And I want to commend the Post-Gazette. They're doing a wonderful job covering a lot of the challenges in the long-term care world in our region. And I can tell you, this whole thing, this whole long-term care system, the nursing homes, the way things are happening, there's some red lights beeping, and there's some things to be concerned about in this entire system. And I think it's important to discuss it. I think it's important to draw attention to it. And then what I want to do is give you some tips on how to protect yourself. But here's the situation. I like to pick on the nursing home on the radio show because nobody wants to go broke in a nursing home. Nobody really wants to pay a nursing home $15,000 a month. But I'll tell you this, nursing homes are there because we need them, right? The owners of most nursing homes are good people. The people who work in most nursing homes are certainly good people. After the pandemic and everything else, who in the world, it would take an angel to want to work in a nursing home right now, taking care of somebody. And so God bless the people that are in there fighting this good battle every day. But this whole government system has this thing set up so wrong. It's not that the nursing home is the problem. The nursing home is not the problem. The problem is that we've got this government rule book that requires you to go broke if you go into a nursing home, right? Because, the government, the way I look at the world, maybe you agree, maybe you don't agree. And I guess if you don't agree, my thoughts may not be for you. But here's the idea. I really feel like the government is failing our seniors. Now, here we are. Think about where we are demographically. We've got the biggest generation population-wise in the history of the country. They have all the money, and they've been saving their money in accounts for the last 50 years that are available for their long-term care. Okay. And the other thing that's been going on here is they have been paying into the healthcare system. They've been paying for Medicare for decades. And the idea behind Medicare is that when I turn 65, hopefully I get to retire around then. And when I'm retired, I get to have health coverage because we have a system in the country where most health coverage younger than that is provided by employers. So when I'm done working, I need health coverage. I'm going to go on Medicare. Great. Now, Medicare has its pros, it has its cons, but here's the problem. Medicare does not pay for long-term care expenses. They just don't pay for it. They'll pay for short-term rehab stays. They'll pay for surgery. They'll pay for pacemakers. They'll pay for hospitalizations. They'll pay for therapy. They'll pay for cancer treatment. They'll pay for a lot of things, but they will not pay for care associated with long-term care issues like dementia, standby assistance for issues like Parkinson's disease. They just don't pay for this level of care. Now, this level of care happens to be pretty expensive because you need a lot of people hanging around the person who needs that level of care. And so the cost of care keeps going up and up and up and up. And the average cost of a nursing home per month in Pennsylvania is in the ballpark of $13,000 to $15,000 per month. It could be 180 grand a year if you end up in a nursing home. And our leaders, the government, has decided that the government is just not going to pay for that. Medicare is just not going to pay for that. Now, Medicaid will pay for that, but Medicaid requires you to go broke first. And forgive me, call me selfish if you like. I'm not going to work for 50 years to go broke because of long-term care expenses. That's not what I want to do. That's not the deal I accept, right? And so we kind of got to plan for this. And here's the other challenge. I mentioned at the top of the show that there's some red lights beeping in the long-term care industry. Well, I've got a little bit of inside knowledge. I talk to people who work in nursing homes all the time. And here's the thing that's going on. They can't hire anybody. It's super, super hard to pay nurses right now. Nurses don't necessarily want to go into long-term care. The nurses who are in long-term care, a lot of them tend to go from one place to the other place because more money and jump around a lot. And so the nursing homes are having huge staffing problems. We have a loss. We have a deficit of nurses in this country. So if you're you got a youngster in your family, a teenager looking for what to do with their job, there's a long career in nursing that is a super big opportunity right now. But anyway, so the nursing homes can't find workers, which means the nursing homes have to leave some beds empty because they cannot meet the mandatory staffing requirements that are needed. And now there's this new legislation being proposed that is increasing, Center for Medicare and Medicaid Services is increasing the staffing requirements for nursing homes. Now, just that sentence on its own doesn't sound so bad. They're increasing the staffing requirements. Good. That means that, in theory, then that means the people that are in nursing homes are going to get more care. Great. Good. Except that the nursing homes can't find anybody to work. Well, that's a problem. Why can't they find anybody to work? Well, they can't pay enough. Why can't they pay enough? Because Medicare doesn't pay for nursing homes. Medicaid pays for nursing homes, but Medicaid pays pennies on the dollars to what private pay people pay, right? So a lot of the nursing homes around accept Medicaid, but what they tell me, I don't know, if it's true all the time, but a lot of the nursing homes tell me that they can't have all these people on Medicaid because they don't make enough to cover overhead. And so we got this situation where they're increasing the staffing requirements, which the nursing homes were not able to fill in the first place, and not increasing the amount they're willing to pay the nursing homes from the Medicaid program to pay these nurses that they're requiring the nursing homes to hire. And it's not a good situation. We cannot, as a society here, we cannot, as a country, allow our nursing homes to go out of business. We need them. We need them. And I like to pick on nursing homes, but the reality is we need them. And when I'm picking on nursing homes, I'm not actually picking on nursing homes. I'm picking on the government program that requires you to go broke if you need a nursing home. It's not the nursing home's fault. It's the government's fault. Medicare and Medicaid. We got billions of dollars for overseas wars, but we're letting seniors go broke in long-term care facilities. And it doesn't seem to make sense to me. Now, I have the luxury of not ever having a desire to be in politics. And so, it's easy for me to say, but my goodness, what are we doing here? And so we got people that are working 50, 60 years and going broke because they have dementia, which, by the way, according to the Alzheimer's Association, 1 in 3 of us are going to have dementia, right? So if 1 in 3 of us are going to have dementia and nursing homes are 180 grand a year. Now, I don't really like this scenario. Now, here I am, this is kind of our role in it, and why we've been quoted a couple of times is because we advise the average citizens on these issues. Now, my job is not to improve the government plan. My job is not to improve the politics around the thing. My job is to take care of my client. And in taking care of my client, what that means is we need to have a plan for Medicaid. Because when you think about this, when you really think about this, There's only three sources for long-term care, three payment sources for long-term care. One of them is I pay privately. Well, at 180 grand a year, I'm not really interested in option one. Option two, long-term care insurance, but nobody buys it. I want to spend a little time on that in a minute. Option three is Medicaid. Well, we could look at the government, but when we're looking at the government, that really means Medicaid for most people. Those are really the only three payment sources. Yes, sometimes the VA has some money for our veterans, sometimes, but not all the time. So I don't want to pay 180 grand a year. People aren't buying long-term care insurance. That leaves Medicaid. And we do an awful lot of work on Medicaid in our office because it's the only payment source. Is it a perfect payment source? No. I just said a few minutes ago they don't pay nursing homes enough. But my client is a client who's going broke in the nursing home because of the stupid government rule book. And so we got to help them protect their house and the money that they worked 50 or 60 years for. You see how confusing and messed up this entire system is? And, nobody's actively trying to fix it. I would love one of the politicians to talk about fixing this as part of the campaign next year, because the baby boomers, if you're listening to this and you're retired or thinking about it, this should be a big issue. This should be an issue that the baby boomer generation is absolutely screaming about. But you know why they're not? Nobody wants to talk about the nursing home. I don't want to go to a nursing home. Well, of course you don't want to go to a nursing home. Raise your hand if you ever want to. Nobody wants to go to a nursing home. But I also don't want my house to burn down. But I better have a plan. I better have some sort of an insurance product or something in case it does, because if my house does burn down, which I don't want to have happen, if it does, I more than I don't want my house to burn down, I don't want to be homeless, right? I don't want to lose everything I got. And so I got a plan for that. And unfortunately, a lot of people don't do that type of plan for long-term care. And this is the type of stuff that we teach our clients about, is how do you position yourself in this crazy system? How do you put yourself in an advantageous position that you can allow yourself to protect your money, your treasure, your family, your spouse, your parent? How can we put ourselves in a position where, okay, the rule book is broken, but at least it's written and we can read it and we can understand that within that rule book, there are some opportunities. And we teach people these opportunities at our workshop. So I want to do a little conversation here about our workshop, which we host from time to time around town. And it's called The 3 Secrets to Estate Planning and Asset Protection. Now, that asset protection piece is the piece we're really talking about right now, is how do I protect my stuff? Okay, the government's rule book is broken. That's a given. How do I protect my stuff so that it's not subject to the broken government rule book? Because, when you think about estate planning is really just a set of documents that are written to answer some questions, like who's in control of me and my things? Who's the decision maker? Who can get to my stuff? Is it me? Is it my kids? Is it the nursing home? Is it the tax man? Who can get to my stuff, right? And so, because if you don't do any planning, or if you haven't done an estate plan since the kids were little, the government likely has a plan for you, right? The question you should be asking yourself is, do I like their rules? And if you spend any time with me, you're not going to like their rules, because I'm watching people go broke, guys. I'm watching people go broke all the time. We have done 6 Medicaid applications helping people protect their homes, 6 in the last month. And, the challenge is most people don't take the time to become educated on these issues ahead of time. They wait until the house is on fire and then they call State Farm and try to get insurance. Well, it doesn't work that way, right? These things are best done when you plan ahead. And these are the issues that we teach you at the workshop. So I encourage you to check out the workshop. It's a free seminar. You can sign up for them at secklerlawfirm.com, SECHLER lawfirm.com. Go to the workshops tab, register. We have them in Cranberry pretty much every other week, and other places around the Pittsburgh region. Come to our workshop. Let us teach you how this stuff works. And then we can talk to you about how we help families protect themselves. So there's the pitch for the workshop. I hope to see you there. That conversation is really around planning ahead for long-term care. It's revocable trust versus irrevocable trust, and how do we use trust and different estate planning tools to protect you. And I'm a big believer that middle-class Americans should take a hard look at using an irrevocable trust as part of their estate plan, because it just delivers a whole lot of protection. So anyway, there's a quick pitch for the workshop. We'll see you there. Um, on the subject of pre-planning for long-term care, let's chat a minute about long-term care insurance. So I was quoted in the Post-Gazette a couple weeks ago about long-term care insurance. They did a nice piece on its challenges, but I can tell you, long-term care insurance is not it's like any other tool. It's not perfect. It's got its own challenges. The history of long-term care insurance is you used to be able to buy these policies, go back to the 1980s, 90s, you used to be able to buy these policies that were really Cadillac traditional long-term care insurance policy. The idea is I spend money on the premiums now, and when I have this catastrophic financial thing later, I've got insurance for that. The problem is with those older type Cadillac policies is the insurance companies lost their tails. Because the claims rate, the amount of people that ended up needing to file for help in nursing homes and other long-term care settings was way higher than the underwriters thought it would be. And so they had a massive claims rate. The insurance companies lost a fortune on these things. And so a lot of the traditional policies have kind of gone by the wayside. The insurance companies don't want to mess with this for the exact same reason the government doesn't want to mess with it. Everybody just wants to push the money onto the consumer, right? They want to push all this risk onto the average middle class family where somebody has dementia. Oh, that's your $180,000 a year problem. We don't want to touch it, right? Now, what the insurance industry has done is the insurance industry has sort of they've changed these products, and I think that these products are interesting. And if you're concerned about this stuff, you ought to work with somebody qualified. We don't sell financial products at the law firm, but you ought to talk with somebody that's qualified to discuss it with you. We can certainly help you with some names, but the long-term care insurance marketplace has shifted from the traditional I pay for insurance, you pay for my care model, and it has shifted more to what is long-term care insurance benefits are added as a rider to a life insurance contract or to an annuity. Okay, so let's consider life insurance for a moment. I pay premium dollars. Maybe I buy a $200,000 death benefit life insurance contract. Great. If I pass away, my wife or kids gets $200,000. But what they've done is you can buy a rider on that policy that says, well, if Tim gets really, really sick before he passes away, now what we'll do is we'll pay out the $200,000 in increments earlier to help pay for his nursing home rather than forcing the contract to pay out when I pass away. And so from an underwriting standpoint, put yourself in the insurance company's shoes for a minute. That's a better policy because we can underwrite it better. We know this policy is going to pay out, right? It's not if the policy is going to pay out, it's when the policy is going to pay out. And so then they can structure these things in a way that the insurance company is in a better position, the family's in a better position, and people can actually buy long-term care insurance. Now, here's the thing about long-term care insurance, though. Nobody buys it. One, because most people find the premiums to be cost prohibitive. And then there's like, if we go up the continuum of net worth in retirement, there's people who say, I can't afford it, I cannot afford it, I cannot afford it, I can afford it. And then there's a window of people who feel like they can afford it. If they're concerned about the issue, they could afford it. And then you go past that window, and then there's people that have enough money where they don't need to buy it because they can just self-insure the risk. And so the window of people in that continuum that actually should be considering long-term care insurance policies is kind of narrow. And most of those people still don't buy the policies, right? So nobody's insuring this risk right now. Most people are not insuring the risk. Some people are, and I've seen long-term care insurance when it worked out great. I've seen long-term care insurance when it didn't work out so well because the company wanted to fight the claim or just make it a general headache and all the rest. And then people who have those older policies, the premiums go up. I mean, it's all imperfect. And the challenge is because so many people are getting sick, right? And so where does that put you? I like long-term care insurance. I like the concept of long-term care insurance because I don't want to go to a nursing home. I want to stay in my house as long as possible. And if I do get sick, I know that might take some money. And long-term care insurance that pays a few $1,000s a month to supplement my income might be a great idea. It might be the thing that keeps me in my home longer. And so you could work with somebody that understands these products and structure a situation that might keep you in your home longer than you otherwise would. But I do want to talk to you about what if we don't have it, right? So I don't want to pay privately $180,000. I didn't do long-term care insurance. We can, at the law firm, we help people plan ahead for Medicaid. We put assets into different estate planning vessels to protect them. So if you get sick later, we protected your house, we protected some money from long-term care. I think that's the great idea. And I think that's a great idea, even in conjunction with long-term care insurance. Long-term care insurance can keep you in your home, but if you want to go to a nursing home, or more accurately, if you need to go to a nursing home later, we have a plan to access Medicaid benefits to pay for that. And that's a pretty good scenario for making sure that, if I get sick, I get the care on my terms, and my wife is not going to lose our home. I do want to chat with you there for a minute, and we teach all of that at the estate planning workshop, the 3 secrets to protect the 3 secrets to asset protection and estate planning, which you can find on our website. But I do want to talk to people who maybe are listening to this and thinking, man, but my dad is already sick, or my mom's already in a nursing home. I'm already going through $180,000 a month, or my neighbor is, or somebody at church is. If you are, or if you know somebody who is already in this situation, somebody's in a nursing home, or they're about to be, they got one foot into a nursing home. A lot of the nursing homes in the billing offices don't really understand Medicaid. Okay. And so they'll tell people you got too much money to become eligible for Medicaid. But if you went to a lawyer like me, we'd take a look at the situation and say, well, but we could do this and we could do that, and we could have the person eligible pretty soon. And every case is different, of course. But I want you to know that you should consider the admission to a nursing home to be a legal problem. That doesn't mean that nursing homes are bad people or bad entities. It means that the government rule book is broken. You're about to go through $150,000 to $180,000 a year. If any other service provider or any other creditor were coming after you for $180,000 a year, don't you think you'd probably call somebody to see if we can get that to stop? And that's the primary role that elder law attorneys play in this whole system, is we help stop the bleeding. We protect assets. We can protect your home. We can protect money even after a nursing home admission. And so if you know someone in that situation, I would encourage you to have them give my office a call, 724-841-1393. Because we offer free consultations. If somebody's in a nursing home and we think we can help, we give you a free consultation, get you in, help you understand what your options are, and then you can decide if this is for you. But I can tell you, about 6 times last month, we helped people save a heck of a lot of money from this broken system. And there's potential that we can help your family as well. Every family is different. I'm not here to promise results. I'm just here to tell you a fact, and that is that most families make Medicaid mistakes upon admission to a nursing home, and most people go through money faster or more than they need to. And in fact, this is becoming such an issue that in Pennsylvania, we have a pending piece of legislation that requires nursing homes to hand you a sheet of paper that says, essentially, you should probably go talk to an elder law attorney. There's actually pending legislation on it right now that would require the nursing homes to give out that sheet of paper, because the government themselves is recognizing, essentially, this system is broken. People are making mistakes. There's things that you can do, but it's so darn complicated, you probably need to hire a lawyer to figure it out. And there's actually a whole subset of lawyers sitting around waiting to help you with this. We're called elder law attorneys. My law firm is called the Seckler Law Firm. You can go to secklerlawfirm.com, find out all about us, SECHLER lawfirm.com. Started the law firm because my grandfather went through a pile of money in a nursing home, and I thought, man, there's got to be a better way than that. And so we figured out a few things that I believe are better ways than that. And so give us a call or check us out online, secklerlawfirm.com, or call us at 724-841-1393. If you're scared about this stuff in the future, we're going to invite you to come plan ahead and learn all about how to plan ahead at an upcoming estate planning and asset protection workshop, free class. We host them around town. And then you can learn about how to work with our law firm from there. But if you have somebody that is currently in a long-term care setting and you think, man, maybe they could use a consultation, maybe they should be talking to somebody who knows something about this, because, I know they're going through a whole bunch of money in this long-term care setting. We typically are able to offer those families a free consultation. If we think we can help them, we're going to bring them in for free and teach them, how it is that we can help them. So check us out, secklerlawfirm.com, 724-841-1393. And I hope to look forward to seeing you at one of our upcoming seminars. I do need to do my my disclaimer again. Remember, guys, this is for your education. This is for your information. I hope you learned something. If you work in a nursing home, thank you for what you do. If you work in the government, let's fix this thing. This is broken. We can do better than this. But regardless of who you are, don't make any decisions based on what you hear on this or any other radio show. It's impossible to give you all the information you would need to make a decision. So this is not legal advice. I am not your attorney. I'd like to become your attorney if you're concerned about this. Give us a call at 724-841-1393. We'll help you sort it all out. Thanks for listening to this week's show. I will see you here same time next week.